Traders, welcome back to another price action trading lesson. We're going to discuss how price action works, what are price action rules, and how to identify high probability setups. The structure of the market is a trading range, and as a price action trader, I follow the trend line rule, which says after break of a channel, we expect for price action to retest the new extreme. Right now, the price action is closing outside of the downtrend. EMA keeps rejecting once, and EMA keeps rejecting twice. And now we have a lower high confirmation setup of the second entry short of the EMA while the downtrend is to get new extreme. And this would be our first high probability setup for the day. If it gets a trigger below this bar, your stop loss goes one tick above the single bar. This is a small bar, very small risk, not even 2 points. You can see market triggered and you got stopped out. This is okay. Nothing in price action is 100%. I took this setup myself. Price action keeps reversing. When I analyzed it back, I can see that also it was a little bit congested, slight stacked area, and it was right after open. But because the signal bar was so small, the risk was so tiny, I still like the lower high confirmation setup. And you can see the downtrend is to get new extreme. If I'm going to be really picky, I can also mark the downtrend a little bit tighter with the break in new extreme. But I still wanted to mark this setup because this is mainly in hindsight when you're watching this live, the wider downtrend fits really well. These tight channels generally are not as common. So price action is reversing. You cannot get frustrated. That is part of trading. I'm going to redraw. I always want to follow channels on the chart. There are always channels being present. Okay, a small break, new extreme, uptrend played out. And what is the structure still? It still resembles a trend range. Flat EMA, price swings up and down. There is more of a bullish bias because every single major low is higher than the previous one. If I want to buy, I need to buy a two-legged pullback high probability setup above EMA. So we have a first entry long. So we're below EMA. So what I'm going to do, I'm not going to go long as long as we're below EMA. Downtrend played out. Price action is finally pushing above EMA. So I'm going to redraw a short-term uptrend. And the setup I'm expecting, it would be a failed second entry short. Can we get it? We cannot. We're breaking the channel. So it's going through your mind. Well, we have somewhat of a bullish bias. We're above EMA and this channel is in play. So according to trend line rule, we expect new high for the channel. I'm going to redraw short and downtrend. We have first entry long. Great. Can we get a second entry long? And now we have second entry long. But this second entry long is not fully at the EMA. You can see there's still a gap. And this is quite significant, especially since this is not a strong uptrend where I could be bending the rules a little bit. So I'm not a big fan of this one because it is not fully at the EMA. Market created new extreme, which means all channels, bullish channels, played out. And you can notice the significant key level that I have drawn on the chart. As a price action trader, if you're struggling to find the good, consistent key levels, there are two main key levels that you always need to identify, and it's easy to identify them. The low day support and the high day resistance during your pre-market structure. Because these important key levels, especially in trading ranges, may eventually come into play. And right now I can see that a lot of smart sellers are coming to the market. We have triple top, it's getting rejected, and now we have a lower high confirmation of the triple top. But because this was more of a bullish bias, I can only mark it more aggressive for more advanced trader. A lower high back into the trend range. You would prefer to see push below EMA and a failed second entry long. Failed second entry long would be reversal pattern. It would be second entry long after all bullish channels played out on the wrong side of the EMA, which is right here. This right here is a failed second entry long. You have a new high, break higher, first entry long, failed, and a second break higher above this bar, counting from the high, so it's a second entry long, failure if there's going to be break below this bar. Can you take it? Well, big problem, far away from the EMA, and the signal bar is quite doji-ish. So unfortunately I cannot take it, even though it worked here today. Next time it may not work, and it will work just enough to keep you trying, and it will keep failing. We have break new low for the downtrend, okay, but notice the structure. From the very top all the way to the bottom, we haven't even managed to touch the EMA. So this means that the bearish pressure is more significant. And still we are not even touching the EMA. We keep working lower, and this tells me there's probably a wider downtrend present because the downtrend is expanding. It's continuing to trend lower. EMA keeps pointing down, and you're expecting for price action to act right now according to trading range rules. You can see I skipped over this structure a little bit. It's simple. There is no good high probability setup at the key entry point. You had to break new low, just a bunch of first entries, and now you're so far from the key entry point you cannot sell. But the bias right now remains bearish. Okay, we have a first entry short. And now we have second entry short, but can I take it? I cannot. Many negatives. First of all, I can see so many matching lows here, which basically allows me to reset the count. And more importantly, we have 15 bars stacked right next to each other. This is a congestion, consolidation, no trade zone, indecision, and the second entry short is bullish doji. I cannot sell below such a horrible signal bar, okay? I can wait for the follow-up bar, but you can see same issue, big stim at the bottom. So if I'm gonna enter this, I would have to wait for break below this wick right here, and this leaves me no room to scalp out. You know, you cannot sell this, even though you expect for price action to create new low. It's too sideways, the signal bars are doji, there's just indecision, lack of bearish momentum. So you wait, when rejoice short on uptrend, still more congestion, don't trade this, no trade zone. This is the first time price action broke above EMA, so I'm not really thinking about buying because the downtrend needs to get new low according to trendline rule. Okay, don't think about buying, just wait. Okay, we are already back at the range bottom, unfortunately. New low first entry short, can I take it? By the time I get a second entry short, more congestion, flat EMA above the EMA, just can't take it. This is horrible setup, horrible area, pure consolidation. This is where you get up and you take a small break. You stretch your back because you really can't force any setup in this consolidation. Once you see EMA getting flat in all these bars, once you see so many stims, wicks at both sides, you know, this is terrible. Now we have something what is called visual two-legged pullback. Technically, this is just a first entry short, but this is a visual two-legged pullback. It is at the top of the trend range. I would like to see technical second entry short, but it is at the top of the trend range. It's visual two-legged pullback. The bias is bearish. The price action rules tell us we need to get new extreme, so I can mark it more aggressive second entry short visually. For more advanced trader, you prefer to see lower high below EMA, you can't get it, and market created new extreme, which means you're pausing your short setups and you find yourself at the low of the day. So if you watch structure like this means, okay, downtrend played out, so I cannot sell. Check. But if I want to go long, I want to see reversal pattern push above EMA, just like here we got felt second entry long below EMA. I want to see push above EMA and a felt second entry short. How is the EMA reacting? We cannot break EMA and we keep working lower. Okay, more bearish bias. So I cannot definitely blindly pick a bottom. Can we reverse? We cannot, and market continues working lower. Now, at this point, your mental state may start to crack a little bit. Because if you're like me, you take a little trap right here at the open, and then later on there are really not that many setups for you to take, easy high probability setups. There's a clear context, clear trend and new low, but no clear setup for us to take, a lot of indecision, a lot of congestion, so you just sit here the entire time and you can't really take it. And this is where your frustration may build up, so you need to make sure, because you want to perceive the information from the market objectively, and the information from the market you will receive may be influenced by your state of mind. So you want to make sure you take small little breaks. You cannot get frustrated because you never know when a good, easy, high probability setup will come around the corner, when the good, easy structure will develop. And this is exactly the lesson that's going to happen today. You can see we have downtrend working lower, two legs down. This is a main trend range, so we expect for price action to go higher. But I want to see that final push above EMA and felt second entry short. We cannot get it until finally we are breaking above the EMA, which is confirming our overall trend range structure. Downtrend played out with two legs to new extreme. So I'm looking at bullish structure. What I have to do, locate a channel. Step one. I can find channel first like this, but I keep getting many small breaks, new extremes. And once you see this and you keep adjusting it, that means there's a spike and a channel alternative that fits much better. We're closing outside of the channel, and I can see, counting from the top, I have a first entry long. Now I'm counting for entries longs because the structure is bullish trend. I also want to see new high. So once I can see first entry long already this far from EMA, there's a big chance we're going to get second leg, and I'm going to see if the EMA is going to hold, because it would be a high probability setup. And we have new high, first entry long, pullback, second entry long. This is a new low, second entry long, two-legged pullback, downtrend played out, we're at the key entry point. So context is bullish, we got the channel, and this is a high probability setup. I actually took this setup myself. I was managed to still hold the runner because you can see my runner survived. And as I can see price action working higher and this EMA rejecting, Analyze this structure. Isn't this structure a little bit more bullish than just this tiny channel explaining the trendline rule? This tiny spike in channel doesn't really explain this trendline rule perfectly. You have so many pushes higher, it's way more bullish. This tells me that there's probably a brand new channel developing. So this was the channel I was looking for, kind of like a stronger spike in channel based on the EMA consistent rejections, and it's going to come from here. I can see massive first entry long rejection of the EMA, which is confirming the bullish bias. EMA keeps rejecting every single time, and I have second entry long. Notice broad two legs. Because these two legs are so broad, this allows me to predict how the wide downtrend would look, and this doesn't fit well at all. The broader it is, this means it is invalid, so we're gonna go higher, and this is a clear two-legged pullback at the key entry point, at the right context with the great signal bar. Market continues working higher, and look at the great runner you could have continued holding. You have a small break new high. By no means you want to think about selling. This is clearly strong bullish channel, strong bullish trend, consistent EMA rejections, so you can see minimal bearish pullbacks. But because I can see that the trend is so strong and you kept pushing higher quite consistently, and we're most likely going to reach the resistance, if I'm going to look closely, let me just adapt to slightly wider channel, and this channel gets so many confirmations here. So this is great alternative for me to draw this wider channel. And you can see you don't have to be perfect when you're drawing the channels. You just have to be close. I don't find the perfect channel every single time. It is trial and error. You don't know which channel exactly is the final version because you don't know what the price action is going to do. No one has crystal ball. But as you're reading the price action, as the price action keeps developing, you're tweaking the channels. And eventually, as you can see, you find channels with more and more confirmations. That explains price action better. So you start first with the initial channels, and the price action keeps developing. If the trend is strong, you will eventually reach the ultimate phase of a channel, which this channel fits perfectly, explains the structure very well. It's getting confirmed here. You have a new high, first entry long, pullback, second entry long. This is exactly how price action moves in pairs of twos, making its way to the key entry point where the correction phase will end. Can you take it? You can already see me drawing the downtrend. So because my initial downtrend would look super tight like this, and this is really not how price action works. Now it worked here nicely because the key entry point is strong, but I prefer to wait for confirmation setup, which comes here. High-low confirmation setup of the second entry long, two-legged pullback, closing above EMA, decent signal bar, and the key entry point is just offering another set of setups, and price action keeps working higher. So you can see clear structure. And the reason why I talked about the mental frustration or possibility for your mindset cracking and weakening during a structure like this, because it's to really emphasize the fact that it is futile to be frustrated because you never know when a good set of easy hypothesis setups will be presented to you. You can see no setups on the way down, but on the way up, it pretty much couldn't be easier. This structure, it's quite easy to identify. The setups are not congested. The signal bars are fairly good. So the structure is much better. So if you are feeling the frustration, just take a break. Walk around the office. You don't need to trade every single second. Trust me, you're not going to miss setups. There are going to be plenty of setups. Market's not going anywhere. Price action is correcting and we have another pullback. Actually, I have micro double top, so I'm going to reset the count. This is a first entry long. Can I get some high low? I can get high low, but this high low is even uglier than the first one. You can see EMA managed to get in one of these bars very flat, and the signal bar is terrible. Stim at the top, so even though it basically acts as a repeat pattern of this structure, it didn't really allow us a great setup to take. Now at first I was playing a break new high, especially given the range structure. But you have to ask yourself, is this behaving as a break new high structure? Let's see, first entry long, and we keep pushing her. Okay, so at this point I need to adapt. Clearly the channel is just a tad wider like this, possibly still in play. Trend is still strong. You have a new high, first entry long, second entry long. Now the second entry long is doji and far from EMA. The trend is strong, yes. I can mark it more aggressive. Personally, I would skip this one because the doji, and if I'm taking a setup that's further from the EMA, I want to see at least better bar, not doji like this. But I can see the signal bar is only 1.5 points, so you can pull the trigger. It's not that bad. And by the way, you can see you can still hold the runner from this initial entry, just trail below each significant swing. I actually took my runner around these highs because I was just about to take a break, so I don't want to leave my position open, but as you can see, I missed a very significant portion had I kept it running. We have a new high, first entry long, pull back, we get a second entry long, high probability setup at the key entry point, great signal bar, new high, first entry long, second entry long, but of course it's getting too late. You can't really take it. I'm marking it mainly as an educational example because market is closing. So this is the overall structure for the day. You have to trade the price action you get, not the price action you want, because in trading you will experience a battle of your ego because you want to see price action offering you what you want, the setups you want, but price action doesn't care about us. The price action is just offering you what it's giving you. So you have to be fully objective. Don't really be too tied down to this. Just try to be objective as you can. If you have a losing trade, brush it off because that is part of trading. You can never avoid taking a losing trade. Nobody is that perfect. It is impossible to predict every single move. The goal is just to follow price action rules so you have an edge on your side in the long run. So I hope you had a good trading day. I hope you find this lesson helpful, educational. If you did, subscribe to the channel, like the video, and I'm going to talk to you next time. Good luck with your trading.